Hi, Richard. Yeah, Matt McKay here with Expert Mortgage Group. We've got Julia, also that works in our residential with Expert Mortgage Group. And Richard, we wanted to invite Richard to go over anything that goes in accordance to credit, essentially how to fix your credit, how to have a better credit score, and so on. So essentially, that's what we're going to cover in this 30 minutes or so. And then, yeah, if there's any questions, we'll have our information at the end, and also Richard's information, so you can be contacted if you need his services. So yeah, welcome, Richard.
Thank you.
Yeah, so I'll kind of dive into a few questions, and I'll let you kind of share your expertise, and we'll go from there. So I guess number one is a lot of folks are always wondering about credit. It's always different. There's two different agencies in Canada, Equifax, TransUnion. But the number one question I want to kick it off with is, what is the basic process of credit repair, and how long does it typically take? So with your expertise, I know you've been in the field for a long time. Essentially, maybe just talk about your background, kind of leading into the question, if you want.
Sure. So my history is mortgage financing, but as you have experienced, and a lot of mortgage brokers and mortgage professionals out there, everything else is good, but then you get to the credit report and there's something on there, which then leads to, okay, what options are there available to get that corrected? And that's where, after writing a book about credit and just developing more of a passion for credit, it's something where I wanted to focus more, saw a niche and a way that I could actually help. And so I wanted to focus on that. And there's the options are a little bit better than what they used to be for disputing, but not much. So now the Equifax and TransUnion are the two credit reporting agencies that you referred to before, Matt, there. And they have different systems. And so one of the biggest questions I get is, well, if I correct it with one, will it just fix both? That would be great, but that's not how it is, unfortunately. So they are two separate companies. They don't talk to each other or share information in between each other. So essentially, they only report what creditors or courts or public records or companies are submitting to them specifically. And not all banks and lenders submit to both Equifax and TransUnion. And so that's one of the biggest errors that are out there is that you're looking at some third-party report, whether it's an app, or it's directly on your dashboard with the bank, but that may not be the version that the bank's looking at, or even the version of the report. So a lot of times the free bank apps, you'll get the TransUnion report, but then that bank or lender will pull the Equifax report, and they don't always match. So when you are trying to correct those or fix something, you have to go and do that process or figure out that process with both Equifax and TransUnion. So Equifax just updated their systems as of about a year ago, and they've had a ton of glitches and just difficulties going from fax and mail to now only, well, you can mail it still, but their main focus is online. And so their system's a little more technical, which can scare or freak people out. But they've worked out a lot of the kinks, but it's still something where their form is very cumbersome. You have to fill it out exactly right, or you'll have a list of all the errors on the side that you have to go through and fix. So that's one option. And then with TransUnion, it's fax and email or mail is all they use. And so there's actually, scratch it. They have a back end now. It's a little difficult to find and use sometimes, but their back end is similar. It's a little complicated to maneuver if you've never done it before, but you can upload documents now with both Equifax and TransUnion.
So it's not something you want to leave at the last minute when you've put in an offer and you have 7 days to secure your financing. It's not something you want to tackle at that time, right? It's what I'm hearing.
Yeah, I literally just got an email from a client who found out that there's a mortgage on TransUnion that he's never had, and it's obviously going to mess up the deal because it's hard enough to afford one mortgage, never mind two. And so this uh, client put in an offer, puts $100,000 deposit down. Sometimes people are going in even waiving financing because they're so desperate to get properties with how hot the markets are in major city centers. And then in this guy's circumstance, I don't know the inner details yet because he just emailed me, but the broker's saying that he's about to lose $100,000 if he cannot get that deal through, and no bank or lender is really interested in looking at it until that false mortgage is off the report. So it's probably just someone else with a similar name, and that information got crossed over. You know, technology is great when it works, and that is now on that client's report. So you do definitely not want to wait until last minute to look at your credit report.
Whoa, that's yeah, and also, I mean, I don't like when people waive their financing without having financing. That's always a
Yeah.
a red flag essentially, and I've seen some people put into very difficult positions. So yeah, really good takeaway on
Yeah.
that. Absolutely, yeah, yeah. And Julia, yeah.
Can you explain, Richard, the most common misconceptions about credit repair?
I think the biggest one is who everybody wants to point a finger at someone or whose responsibility it is.
Mm,
And so a lot of consumers, I deal with a lot that are coming out of some kind of insolvency, bankruptcy, consumer proposal, some kind of debt program. And they assume that because they've spent all this money and gone through this legal process, that at the end of it, that they're good to go. And legally, yes, they are good to go. They don't owe the creditors anymore. But unfortunately, they're not explained in depth enough. I mean, all the trustees put it in the fine print or have it on their discharge documents, but unfortunately, the consumers are just not getting it of how important it is to check both Equifax and TransUnion and make sure that everything is correct. The other hard part with that is how do you know if it's correct? If you've never looked at a credit report before, it can be very overwhelming, and it may say in there included in consumer proposal, but it's still showing a balance and an overdue amount or late payments. And with your limited knowledge, you may not be able to know what that effect is having on your ability to get approved for a mortgage or your score at the time. So I would say the biggest one is just understanding the process, the ins and outs, and it's not as straightforward as it could be, but that's a difficulty right there.
yeah, thank you.
Yeah, so oh, go ahead, Julia.
I was just saying thank you.
Yeah, so on that note, I mean, when you did mention about, bankruptcies and consumer proposal. Number one, I think, like, if a lender has lost money, obviously they're probably not going to rush to get anything fixed for a consumer that did not pay them, right? So that's
Right.
that's my impression on this. But can you maybe explain the difference between a bankruptcy and a consumer proposal? We have folks oftentimes are coming in and they said, no, I haven't gone bankrupt. I've just done a consumer proposal. Well, sometimes that just a consumer proposal might be more than just a consumer proposal when it comes to applying for a mortgage or
Credit.
so on, I guess. Yeah.
Yeah. I don't know. I can't remember ever having a talk with my parents about bankruptcy being bad, but I think we all grow up with this like innate idea that bankruptcy is kind of like the worst financial position to be in. And in Canada, we have something that's called a consumer proposal. And so for an insolvency trustee who typically focus just on bankruptcies or is known for bankruptcies, they love consumer proposals. One, because they get paid more, because it's just a
Interesting.
different process. But more importantly, they don't have to say the B word, because no one likes to hear it and everyone's freaked out about it. And so it's a great way to advertise something that essentially does the exact same job in the end, eliminate debt, but there's a lot less resistance for a consumer or Canadian to enter into it. And so there's a lot of there's a lot of misconceptions or just not having the education to know really how that affects the score. And so it's being sold by a lot of companies that it's, the best thing ever. Just get rid of your debt. You're in it, it's almost like a consolidation loan is how it's sold. And so people think, oh, okay, well, I'm paying a percentage back and the banks are getting more money than they would in a bankruptcy, so it must be better for my credit report. Unfortunately, how the credit system's set up and just the way that banks and lenders report things currently, all the debt programs that are out there essentially mess up your credit as if you were in a bankruptcy. So the creditors, and Matt, you've experienced this a lot. You take a consumer proposal, consolidation, credit counseling, or some debt management program, or some bankruptcy, and regardless of how it's kind of packaged or the name behind it, the lenders look at it almost the exact same way. They want to they see that you've messed up or there's been some kind of financial turmoil or problems in the past, and they want to see that you've reestablished or rebuilt it. But unfortunately, the consumers that are getting advertised these different products, they are not necessarily being told that it's going to be a major hurdle for reestablishing or getting credit while you're in a proposal or any other debt program for that matter.
Interesting. And on that, I mean, when, we've seen clients of, taking on a consumer proposal versus a bankruptcy, like sometimes we see that a bankruptcy is faster to rip off the Band-Aid and they could get back on their feet faster if there's no real estate involved, like compared to a consumer proposal, which can be set up on a much longer, like a 5-year plan, for an example, where their reestablished credit will only start after the consumer proposal has been paid. But is that what you're seeing, I guess? Is that the...
Yeah, and that's the biggest difference is what a lot of the debt professionals are advertising is that a bankruptcy stays on your credit report longer, therefore it must be worse. But the problem is that the banks and lenders, how they look at it is they want to see that you're in and out as quickly as possible and that you've had some reestablished credit. And they don't consider reestablished credit until the day that you've completed that debt program. So a consumer proposal or credit counseling debt management program, they're typically set over 5 years, which means you're in it for 5 years, and then you have a couple years to reestablish credit. Where in a bankruptcy, you can go in and out as little as 9 months or 21 months if it's your first time. And so you're in it for less time typically, and then you still need that couple of years of reestablished credit. So you need to start reestablishing in the eyes of the banks and lenders sooner. And then, as we've already mentioned, whether it stays on your credit report or not really the biggest deal for the lenders. They just want to see that you've reestablished. So that's
super.
So
Excellent.
speaking of reestablishing your credit, what steps can clients do to improve their credit scores before they go to apply for a mortgage?
So the biggest thing, if they've been through any kind of debt program or just starting out in Canada, so that's another big one in Canada. Lots of new people coming in, not sure. Well, they're coming from most of the time from places that don't obsess about credit like we do in North America, and so for them it's a little backwards because if I use cash, that would mean I'm rich, whereas if I use credit, I'm poor. And here in Canada, the banks say, if you just use cash, you're an unknown. We can't trust you. We want to see that you can handle credit properly. And so they want to see it. And so that's a big flip in mentality or change in mentality that new to Canada need to understand. And so getting credit, whether you're new to Canada or reestablishing, is key. There's lots of different programs out there. However, in my experience, and Matt, you can maybe confirm or deny, but in my experience, the banks and lenders like to see credit cards as a way to reestablish. Is that been your experience as well?
Yeah.
Yeah.
And
So
it's at least 2,500 bucks or more, I guess, is what
Yeah.
we've experienced is it has to have a certain dollar amount, not just a $500 credit card, I guess.
Yeah. So
And
that's a
for
big
major
one.
institutions.
Yeah,
the better.
and major institution or the yes, the more credible the institution, the better it is in the eyes
Yes.
of underwriters as well, for sure.
Yeah.
And so that's the big one for reestablishing and then using it properly is the next big thing. And so yes, the banks want to see that you have access to credit, but they don't want to see that you're desperate or dependent on it. And how they determine that is essentially what your current balance is on a monthly or regular basis.
Right.
So the low balances is the key one there.
Yeah.
On that, what percentage of utilization do you typically see that it should not be exceeded? Like I've heard, 70% is what I've heard, I guess, but what's the magic number as far as percentage of limit?
Yeah, it's all over the place as far as what you'll hear. Now for my book or research for the book, I wanted to know what the answer was. And so I studied hundreds of credit reports for the first book. And by the time I did the second one, it was at thousands. And I never noticed a big jump to the score for being anything under 50%. And so what I mean by that is the lower the balance it is, the better.
Okay.
But anything under half seems to be good to go. Anything over that half seems to be higher risk and in the eyes of the banks. And so therefore, the closer you get to the limit, the lower your score will be because of it. And the biggest thing that I don't think people get is they may hear that, but they don't understand how dramatic it is. And to give you an idea, you can drop your score 50, 80, 100, 150 points just by being maxed out on credit cards. So it is extremely dramatic for banks and lenders of how important it is.
And I've seen some folks that sometimes having very low limits on credit cards because they're just afraid of credit. But sometimes having $1,000 limit can work against you if you have to purchase a plane ticket or anything essentially, and it just generates a report once you're maxed out. So yeah, no, thanks for clarifying that.
You bet.
So what are some quick wins that someone looking to improve the credit score in a short period? What could they do for these quick wins?
So kind of the on theme of what we've been talking about, one, you want to make sure everything's correct on your credit report. Let's say if you have a collection that's not yours, getting it removed will be a huge win or a quick win for you. The other one that you're in control of, if everything else is correct, is the balances on the credit cards, as we've already talked about. So as I mentioned, that your score can drop dramatically, double digits, even triple digits with your high balances. Getting those balances under half and keeping them under half at all times, that can also boost your score pretty quickly as well.
Terrific.
So on that, Richard, by being the expert in this, obviously, like what's ways that clients can kind of identify any items? Like I know that there's ways, I guess, that you can maybe order your own credit score, like just if you want to be sure of all the information and be ready essentially to do that application, like what steps can the clients take to do that, and what do you need afterwards if there's anything that needs to be disputed? What kind of information do you need from the consumer, I guess, to go battle that out on their behalf?
Well, the good news is that Equifax and TransUnion are both, I think, putting in some effort to make it more easily read. They still have really intense terms like delinquencies and derogatories and some things that maybe are a little intense or still complicated or confusing. They definitely have a lot to go on making it more friendly to understand. But I think the biggest thing is not being too overwhelmed to not get started. If you're just going in there and checking that your personal information is correct, I would say that's a win. That's pretty easy. Name, address, telephone. If it's not yours or something's messed up there, then try it. The account information can be a little more complicated depending on, if it's a public record or something. But with that, once again, the more time you spend looking at it, the more you'll understand. I've created some videos to walk people through how to understand or what they should focus on when looking at a credit report, both the Equifax and TransUnion. The third-party reports are okay, but a lot of times they don't have all the information that's needed if you've been through some kind of debt program. So if you're just checking your score or just kind of want to get reminded every once in a while just to see if there's major drops or something, then the third-party apps and stuff are fine. But I do like the Equifax and TransUnion free reports that they send out, or you can get online now. Those are great with their new format.
And that's once a year, I guess, that you can get those reports. Am I mistaken? And is that?
Yeah, that's changed. So now both Equifax and TransUnion allow you to get a free report once a month.
Oh, wow. Okay.
And so you can do it every month if you want.
Hmm.
Equifax got sued by Quebec, and now they've essentially changed it for all provinces, where they now offer the score for free every month as well.
Oh,
So
wow.
not that score is the score the banks use, and that's a whole different conversation. But still, it's nice that they are making some changes in the right direction.
Yeah, absolutely. And to your point, I mean, it can be tough to navigate on the regulators, I guess, when we're regulated in a few different provinces. But
Yeah.
when that happens, we have to have simplified forms when we're doing a mortgage, essentially to explain, like in common terms that could be understood by the average consumer, essentially. But
Mhm.
to your point, it's very difficult to navigate credit bureaus and all the terminologies in those. Yeah, absolutely.
Yeah. My next question for you, we've actually gone over it a little bit, so I'm just going to change it up a little bit. How does the use of credit, of monitoring their services, how does it help with them to manage their credit scores and their credit history?
If you are a victim of fraud, or you've just come out of I guess a debt program, or not even then, so if you're a victim of fraud, or let's say you are trying to correct something on your report and you need to know right away if it's corrected, maybe you're during mortgage financing or preparing for something of that sort, and you're trying to get updated right away, then those monitoring systems, or Equifax, TransUnion have them, and they're $25 a month. So not a huge deal, but still, something. It's an expense. That's something where with that, it makes sense on those couple scenarios, as far as when you're in desperate need of fraud protection, or just tracking your credit report on a daily basis or weekly basis. That's great. But for all other, I would just say the free ones are great. They come once a month, or you can get access to it once a month, and that's good enough for the majority of Canadians out there.
Yeah, and it's like credit scores. I mean, when you have a good credit and a good credit score, it's worth a lot of money, essentially. Like if not, like if you might have to pay subprime rates, essentially, like have more expensive products, go to private lenders and so on when you don't have a good credit score. So yeah, it's extremely important to keep that in check. Yeah.
And to go hand in hand with that, are there any risks or pitfalls associated with credit repair services that clients should be aware of?
Yeah, if you go on the government website, they do not like credit repair companies, and talk about all the potential fraud or issues that are out there. Now, I guess I'm technically a credit repair company, so I guess I won't take any offense to that. There's lots of, I guess there's not a ton in Calgary or in Canada. In the US, it's a huge business, but in Canada, no one knows how to do it, and so it's something where they may promise that they can jump up your score quickly, or that where I've found is a lot of companies will say that they'll dispute everything negative on your report, or just promise that they're going to take it off regardless of whether it's correct or not. That's something that's very different between myself and anyone else that I've come across is if it's not correct, then I'll dispute it. But if it's correct information, even if I think that they may take it off, that's not something where I focus. Just pay your bills, even if you don't want to. I can't in Canada. It's not like a magic wand where you can just remove anything from the credit report. It's very different from the States, and so there's not a lot of really predatory people that I've come across that will do that. Where I've seen the most, I guess, risky is people promising that they're just going to remove it and here, pay me a couple $1,000 and I'll just set you up with a new credit report, or I'll just remove it. And that stuff in Canada is just not even achievable, or it's very difficult. So
Well, and on that note, we can vouch for your services. I mean, we've had great success with, referrals to you. So no, we appreciate your services and how
Yes.
we are with this. Absolutely. Yeah.
I appreciate that. Thank you.
Yeah, you're welcome.
Any stories you can share with us of clients who have significantly improved their credit scores?
Oh, the stories I could tell. I think one that stands out in my mind that is just really fun for me is when someone comes and they are a little skeptical of what can be done or how much it can be approved. So this one client, he contacted me. He was in the middle of a mortgage process, and the broker uh, was essentially saying the only way that he could close on this deal that he had co-signed with his parents was going to cost, thousands in fees. It was a private type situation where they're, he's charging fees, the lender's charging fees. And it was originally set up with a major bank, but the major bank came out 11th hour and said, we're not going to do it because of the credit. And so he reached out to me. He had some issues from an insolvency that were on his credit report, making it look a lot worse than what it was. I let him know that based on the rules, the government rules, those accounts were no longer supposed to be on the credit report. And because it had already passed the time frame. And within, I think it was 2 days, his score jumped up 180 points, which completely changed the process. And he was approved for best rates, best terms, shortly thereafter, now with the score done. So that's something where seeing a quick change. Oh, and I guess the part that I enjoyed the most about that is that his parents were really freaked out about using some guy, but the mortgage broker did a different mortgage broker vouch for me, and that made the difference. And I said, try me, test me, let me show you, and then I had a lot of fun saying, yep, we got it done, and then he had a good time telling his parents about the fact that they didn't have to spend thousands of dollars just to get the property.
Excellent.
Super. And Richard, I know you've got kids, and I see the nice card that you have in behind you essentially. So one of the like, what would the advice be for that you'd give, I guess, to your kids, like as they get to, closer to adulthood, I guess, like what kind of an advice would you give to young folks essentially getting into the market, getting their first credit card and so on?
I'm a little different than maybe say my wife on this advice. I would say jump in and screw up as quickly as possible, because the faster you screw up, the faster you learn. I think there's, obviously I'm there to educate them, and they probably know more about credit than most people. So I think they'll be okay. But as far as just get started is the biggest thing. If you make a mistake, what I love about credit is there is a time frame with it. So it's not like it's on your report forever. And so I get a lot of people coming to me talking about being young and dumb, and those two words go together for a very good reason. But the fun part is saying, okay, let's pull your credit, see where you're at. Then we look and their credit's way better than they expected. And the turnaround time to fix it's way quicker than they expected. And that's just because most of their young and dumb has already fallen off the report. So the sooner you do it, sooner you learn, move on with life, and anything else can be pretty much fixed down the road. So
Yeah.
Super. Excellent. So Richard, you own the credit game essentially, and you've written books. Like how can people find your material, your videos, like your book, and what does that look like when they're contacting you for your services? Essentially, what does the first initial consultation look like? What should they expect in the process?
you bet. So I do have two books. The first one is a little outdated. The newer one is the most up to date and pretty current. But where I spend most of my time is on YouTube for YouTube videos. To be honest, if you're a reader, then great. There's the audio version or the regular one. But if you're cheap like I am, you can just get all the content on YouTube. I put it all out there, and I actually involve my wife, and she's amazing because she hates this kind of finance stuff. And so she asks great questions and makes fun of me, and it's good time. So YouTube free, tons of information out there, way more than you would probably ever want to know about credit. It's on there. So that's the best resource for free. If you're looking for some kind of a customized plan where you really want to get a mortgage, but you're just out of an insolvency or you know that you need some help, then reach out. If you have a copy of a report, great, you can send that over. I can let you know if I can help. If it's just pay your bills on time, then I'll tell you that and you can be on your way. But as far as if there's something strategic that you can do to really jump up the score quickly, or just some real strategies that need to be involved to just get it to mortgage financing, then that's great. So it all starts with looking at the credit report. If you give me a copy or can pass that on, then I can do that review for free, and then let you know if I can be of any help going forward. And then if you do have errors or fraud and you're in a hurry, or you need to you've tried and it didn't work, then that's something where I spend a lot of my time disputing errors with Equifax and TransUnion.
Super. And you're in Alberta, but you offer services across the country?
Yep. Yeah. And one of the nice things is even in Quebec, I know that rules change a lot with different provinces and different financial things, but with Equifax and TransUnion, it's pretty static across, there's a few changes, but not much. So I can help people across Canada. Yeah.
Excellent. Perfect. Well, Richard, thank you for your time. Always a pleasure. Thanks, Julia, for taking the time. So yeah,
You bet.
And we'll get clients to reach out as they need your services. Thanks so much.
All right. Thanks
Thank
for having me.
you.
Thanks.